The U.S. Fed hiked rates by 0.75%, the largest in 28 years. But how will it impact the Philippine economy? Joining us now is Dan Roces, Security Bank's Chief Economist. Thank you so much for joining us, Dan. The Monetary Board of the Bangko Sentral ng Pilipinas will be meeting next week. What is your outlook? By how many points, basis points, will they raise the cost of borrowing? 0.25%, 0.5%, or 0.75%, just like the U.S. Fed?
I think it's so far, no, based on the dynamics that we're seeing, it's going to be 25 basis points now. So that's 0.25%. The BSP's monetary tightening cycle for now will be driven mostly by its outlook on inflation dynamics. So this includes second round effects getting more entrenched now. So that means more and more petitions for wage and fare hikes, among others. It also includes the emergence of demand-side pressures on inflation, no? And of course, inflation's effect on the positive growth prospects going forward. For now,
a 0.25% rate hike, Dan, is that sufficient to curb inflation when all the other central banks, the major central banks, the Fed, even the Bank of England raised again interest rates yet again today? They've been so aggressive.
Yes, they have been. For now, 25 basis points is a good recourse with month-on-month inflation locally, actually lower compared with the 0.6% and 0.8% for March and April respectively. So the headline print in May was 5.4%, but the month-on-month was actually 0.4%. So that's lower than the March and April month-on-month.
But what
the
if
BSP? Sorry, yeah.
But what if the BSP surprises us tomorrow with a 0.5% increase in interest rates? What could this mean? What are they trying to signal?
Well, there is that possibility, but we heard it straight from the incoming governor himself. He does not like 50 basis points. And he is correct to say that it could be misread by the markets, and that also affects the credibility of the central bank. So the BSP has actually the luxury of time and very large dollar reserves. I think they are striving for balance to ensure that inflation targets next year are met, while growth prospects aren't really pulled down because of faster rate hikes.
So if we just see a 0.25% increase tomorrow, could the markets also think that the Bangko Sentral is behind the curve and they could attack the peso? And there we could see another fall of the currency against the US dollar.
Well, a deeper currency slump would be a big headache indeed for the central bank. A depreciating peso will bloat the value of the country's imports, so that includes oil, which, as we all feel, has turned costly amid the war and also the supply chain problems that we're seeing globally. Rate hikes usually help temper the currency's weakness. Although the BSP might likely dip into the dollar reserves to ease foreign exchange fluctuations, the BSP can also afford to not go hard in its tightening. So given the current environment, we might look at the FX trend differently. They might likely not raise rates to manage FX alone, but rather it's more towards inflation control.
From your point of view, is the Bangko Sentral behind the curve when it comes to raising interest rates? The last time they raised in May was also just 0.25 point. And if they do raise again next week, June 23rd, it will be another 0.25%, which is just a total of 0.5%. And if you compare that to the Fed or to the Bank of England and other central banks worldwide, it is not as aggressive.
Well, there is some debate on what the basis of the curve should be. But the fact that inflation expectations now are higher, well, that could be a basis. Meaning if we say that the job of the BSP is to anchor inflation expectations, then given how expectations are now, it is behind the curve. However, jump-starting policy normalization last May is a way to catch up with the so-called curve. So I guess the prudence that the government exercised in terms of the stimulus versus the stimulus in the US afforded the BSP enough elbow room to be behind the curve in the meantime, unless inflation grows too fast. And I'm talking about 6%, 6.5% levels.
Yeah. So-
Supporting growth recovery remains the top agenda.
Right,
And
correct.
inflation is a headwind to that. So without slowing down the recovery too
Yeah.
much, I think the BSP is doing a balancing act.
Okay, so if they raise rates next week by 0.25%, 0.25%, what could this mean for our kababayans, micro and small businesses? How could this impact them if we see higher interest rates next week?
Well, one thing we have to understand about rate hikes, at least in the Philippine setting, the impact of rate hikes is usually gradual, probably taking around 6 to 8 months for the hikes to get fully absorbed by the financial system. So, having said that, the economy has the capacity to absorb slightly higher interest rates, especially now that demand is almost back to pre-pandemic levels.
And the government is saying we will not experience any kind of stagflation, which means stagnant growth and higher inflation or higher prices. Do you agree with them?
So far, yeah, the indicators are showing that there is low risk for stagflation. Unemployment rate, which is an indicator of stagflation, is actually near the pre-pandemic level already. I think it printed 5.8% last reading. Whereas the average pre-pandemic unemployment is 5.5%. So we're near that. We're seeing mobility improve. We're seeing retail footprint essentially above pre-pandemic levels lately. So
Okay.
the possibility of stagflation is quite low at the
So
moment.
briefly, Dan, what is your outlook for economic growth by the end of 2022? And where do you see the Philippine peso against the US dollar in the medium term?
Well, we're expecting growth to be positive still. No? So far, we have the number at 6.5%. Given the first quarter was really strong, I think the second quarter will also be quite strong. But given the base effect from last year, it could likely print at around 5%. But it doesn't mean that the trajectory is slowing down. No? What we have to look
And
at
for
is
the
the
Philippine
seasonally
peso?
adjusted numbers.
And for the Philippine peso against the dollar?
For
Where
the
do you see
Philippine
it?
peso, given that we might have, because we are recovering on imports are higher, expected to be higher than exports, so that brings the current account deeper to deficit. The peso will likely be depreciating somewhere around the 54 peso to the dollar by the end of the year.
All right, 5 to 6.5% by year's end, and this is definitely far below the economic manager's target of 7 to 8% GDP
I'm sorry,
for this year.
We are at 6.5%. 6.5%.
All right. So still below the economic manager's
Still below,
outlook for the remainder of the year at 7 to 8%. Thank you so much for your insights, Security Bank's Chief Economist, Dan Roces.